Hello and welcome. Today we're going to break down one single, really fascinating day in the market. It's a day that tells a perfect story of a tug-of-war. You've got optimism at home pulling one way and anxiety from abroad pulling the other. Okay, let's get right into it.
But first, the usual disclaimer. Just a reminder, this is purely for educational purposes. Trading has some serious risks involved, so it's absolutely crucial you understand them before making any moves.
All right, let's set the scene. The market came into this day on an absolute tear, riding a powerful winning streak for 5 days straight. And yeah, on this day, it actually made it a sixth. But the real story here isn't the win itself. It's about just how small that win was.
Which leads us to the big question for today. With all that amazing momentum, why did the market suddenly feel like it just slammed on the brakes? What stopped such a strong rally in its tracks? That's the mystery we're going to solve.
Our first big clue is right here at home. There was this huge piece of good news, acting like a powerful tailwind, just pushing the market forward with some serious force.
And what was that big story? Well, it was a landmark decision on tax reform. A special group of ministers basically gave the green light to a massive overhaul of the GST system. And believe me, the market had been waiting for this.
So what did this overhaul actually mean? Well, they kept it pretty simple. First, they got rid of those complicated 12% and 28% tax slabs and streamlined everything into just two main rates, 5% and 18%. Simple. And second, they kept a special higher 40% rate, but only for a small list of sin and luxury items. So the whole point was to make things simpler and really give a boost to consumers.
Now, the timing and the impact here are absolutely key. This wasn't just some boring technical change. It was a huge reform designed to get people spending, and it came right before the massive Diwali festive season. For the market, this news was like putting a firm floor underneath prices. It pretty much guaranteed that any dip would be met with people eager to buy. But you know how it is. For every tailwind, there's often a headwind. While India was celebrating its good news, the rest of the world was anxiously looking at the United States, specifically at a little town in Wyoming called Jackson Hole.
See, while investors here were cheering the GST news, global investors were all hitting the pause button. They were all just waiting, holding their collective breath for one single event that could literally change the direction of markets everywhere.
And the source of all that anxiety was the annual Jackson Hole meeting of central bankers. Investors were totally split. The bulls were hoping the U.S. Fed chair would signal that, hey, rate cuts are coming. But the bears, they were afraid he'd stay hawkish, stay tough on inflation and keep those rates high. This uncertainty just created this massive risk-off feeling around the globe.
So, here's the bottom line. The good news at home pushed the market up when it opened, but this global uncertainty put a lid on it. It just capped the gains. And traders who'd made a bunch of money in that 5-day rally, they decided it was a pretty good time to sell and lock in those profits.
Okay, so we've got a domestic tailwind and a global headwind. How did this fight actually play out? Well, we can see it by looking inside the index itself. There's a really fascinating story of rotation going on. This data tells a classic story of money just moving around. On one side, you have the safe defensive sectors like pharma and healthcare. They saw strong buying as investors look for safety from global risk. But on the other side, the very sectors that were supposed to benefit from the GST news like auto and FMCG, they actually saw people taking profits. What does that tell us? It tells us investors thought the good news was already priced in.
Which brings up a great question, right? If some traders were selling, who was buying? Who was on the other side of that trade? To figure that out, we've got to follow the smart money, the big institutional investors. And here's our answer. Both domestic and, this is a big deal, foreign institutional investors were buying. Domestic institutions kept up their strong support, but the really big news was the return of foreign investors. They poured in over 1,200 crore. This huge wave of buying is what soaked up all the selling and kept the market from dropping.
So now we have all the pieces of the puzzle. A strong positive story at home, a cautious negative story globally, and a divided market on the inside. Let's put it all together and figure out the final verdict and what it means for the days ahead. And this is the result of that epic tug-of-war. A tiny, almost flat gain of just 0.13%. Now, that's not a sign of weakness. It's the sign of a market in perfect balance. The domestic bulls and the global bears basically fought each other to a standstill.
So what should we be watching now? Well, the battle lines are clearly drawn. The floor, or what we call support, is at that 25,000 level.
The bulls absolutely have to defend that to keep the uptrend alive. And the ceiling, or resistance, is at 25,160. That's the exact point the market hit today before it got pushed back. Breaking through that is the key to the next move up.
A quote from the day's analysis really just sums it all up perfectly. The market is standing on a knife's edge, caught in this really delicate balance between the good news at home and all the uncertainty from abroad.
And that leaves us with the final, critical question. We know the domestic GST reform is the fuel for a potential rally, but is that wall of global anxiety built around the Fed's next move going to be too high for the market to climb? That is the story to watch.